Have you ever wondered how a market known for soaring promise can suddenly shift its course? California's housing market tells this very story. If you're into amazing content like this, hit that subscribe button right now. It's totally free. A tale of record-breaking growth and a dramatic twist that leaves many asking what comes next. Over the past decade, this market soared to unprecedented heights, fueled by ambitious buyers, rapid urban expansion, and an economy that seemed set on breaking free of all limits. Today, we journey through the remarkable rise, what the inevitable correction, and the cautious optimism of tomorrow. In the early years of this saga, California was an emblem of growth and possibility. Home prices climbed steadily, fueled by overwhelming demand and optimistic prospects. A decade-long surge pushed median prices to remarkable levels, reflecting a seller's market where demand far outstripped supply. Communities flourished, new neighborhoods sprouted, and the dream of homeownership enticed countless families. With median prices approaching levels once thought impossible, owners celebrated fortunes made overnight, and investors poured capital into what seemed like an ever-booming sector. This period was rife with fervor and ambition, a time when the promise of wealth and security materialized one home sale at a time. Yet, as with many great pursuits, the honeymoon could not last forever. Underneath the optimism lurked subtle shifts in economic currents. By mid-2025, behind the scenes, key indicators began to whisper of something changing. Home prices, previously on a relentless upward track, had climbed dramatically, reaching nearly $650,000 in many parts of the state. This impressive growth, however, masked emerging signs of imbalance. Demand, once overwhelming, was quietly softening. Economic factors were starting to realign the once unshakable confidence of homebuyers and sellers. Even as headlines recounted tales of prosperity, a cautionary tale was beginning to unfold. The turning point arrived in late 2025, a moment that reshaped the narrative of an overheated market. Data began to tell a different story, a 15% year-over-year decline in home sales, an increase in average days on market to about 30 days, an unexpected surge in inventory. The unmistakable signals of a cooling market emerged as buyers grew more selective. Sellers became more reluctant to miss out on optimal pricing. This was the moment when California's legendary seller's market started to transition into what many now call a buyer's pause. The correction, though gradual, was both profound and inevitable, a reminder that markets, like nature, ebb and flow with changing tides and shifting winds. Within these transformative months, the real conflict of this narrative took shape. On one side was the long-standing energy of a booming market, a force that had driven prices up and created a fever of economic activity. On the other side was a reality rooted in fiscal caution. Economic challenges began to impact buyer behavior. Rising interest rates, changing demographic landscape. As mortgage rates hovered at challenging levels, potential homeowners reconsidered their budgets. Families and investors alike found themselves reassessing risks against the backdrop of a market that once promised endless opportunity. The correction was more than a statistical shift. It was a fundamental change in the dynamics that had defined California's housing identity. Amidst these evolving circumstances, experts emerged with insights to navigate the tumult. They observed that amid the cooling market, there were opportunities for serious buyers and cautious investors. Forecasts pointed toward a stabilization in 2026. The California Association of Realtors predicted modest growth for single-family home sales and a slight increase in median prices, hinting at a market poised for a new phase of equilibrium. Alongside these economic corrections, a ray of optimism emerged. Housing affordability was expected to improve ever so slightly. In this new landscape, every statistic took on deeper meaning. A 2% increase in single-family home sales, a modest 3.6% rise in median home prices, and a predicted dip in mortgage rates were not just abstract numbers. They painted a picture of a market seeking balance after years of extreme highs. The drop in mortgage rates to around 6.0% was particularly noteworthy. It signaled a potential easing for buyers, whose dreams had at times been sidelined by the challenges of high borrowing costs. Legislative changes added further nuance to the story. Laws encouraging increased housing density near transit hubs promised to enhance supply and drive affordability in the long run, offering a tactical shift in planning and urban development strategies. Loving the video so far? Give it a thumbs up and subscribe. It helps more than you know. As the narrative unfolds into 2026, the market finds itself at a fundamental crossroads. For buyers, the evolving market signals a chance to participate in a more balanced environment, one where thoughtful decisions and caution may yield long-term benefits rather than risking financial overextension. Sellers, meanwhile, are coming to grips with a reality apathy, where the days of rapid exponential gains have given way to a steadier, more measured pace. Investors face perhaps the most nuanced decision: to adapt to lower growth expectations while identifying pockets of opportunity that remain lucrative even in slower times. The transformation, while challenging for some, opens up possibilities for those willing to embrace a market that prizes sustainability over the fervor of unchecked expansion. The transition has not been without its moments of uncertainty. Many who once reveled in a booming market now question if the era of spectacular profits is truly behind us. There's a sense of loss, a nostalgic remembrance for a time when every sale promised instant wealth and every listing was a competitive race to close a deal. The taste of success was sweet, but it was also accompanied by the inevitable blemish of risk. Economic reality has a way of tempering even the most exuberant dreams, and this correction, though measured, is a stark reminder of the impermanence of market highs. Yet, in every change, there lies an opportunity for reinvention and careful recalibration, a reminder that every market cycle carries with it both challenges and the seeds of future resilience. In lively conversations among market analysts, the tone has shifted from unbridled euphoria to pragmatic reflection. Seasoned experts analyze the data with deliberate care, recognizing that trends rarely follow a straight line. They point out that while the infancy of record-breaking numbers is behind us, the future remains rich with potential. Every rise, every correction, every adjustment in market behavior contributes to a broader narrative, a story of adaptation and growth in the face of economic challenges. As California moves forward, this new chapter calls for a blend of renewed caution and hopeful anticipation. Financial planners, real estate agents, and local policymakers alike are collaborating on strategies to support a more balanced market that honors the lessons learned from the past. For those who have been watching closely, the evolution of California's housing market is not just about numbers. It's a reflection of changing dreams and shifting realities. In homes that once symbolized endless opportunity, a new narrative now unfolds, a tale of gradual correction and cautious optimism. It is a story that reminds us that even the mightiest surges are followed by periods of recalibration and thoughtful reassessment. The highs and lows blend together into a natural cycle, one where sensational growth gives way to deliberate shaping of the future. As we stand on the precipice of 2026, the market invites us to rethink what it means to succeed in real estate today. It challenges buyers to look beyond immediate gains and to consider the sustainability of long-term investments. It encourages sellers to appreciate stability over explosive, fleeting profits. And for investors, it presents an opportunity to recalibrate strategies in a market that now prizes measured growth and realistic returns. This balance, while far less dramatic than the frenzy of the boom years, may well offer the stability needed for lasting prosperity. In closing, California's housing market has traveled a remarkable road to a period of thoughtful correction and renewed possibility. The evolution reflects broader economic realities and human aspirations, the desire for security, balance, and a fair measure of opportunity. What began as a sizzling seller's market has transitioned into a landscape where caution, informed decision-making, and realistic expectations guide the path forward. Today, as experts continue to dissect trends and forecast future shifts, we find ourselves at a pivotal moment. The market is no longer an arena of unchecked exuberance, but a measured environment where every decision carries weight. Amidst this change, we are reminded that adaptation is the key to thriving in any economic cycle. With careful planning and a renewed focus on sustainability, California's housing market stands poised to grow in ways that benefit households, enhance affordability, and forge a legacy built on resilience rather than momentary excess. The story of California's housing market is still being written, a story that reflects both caution and promise. As homeowners, investors, and dreamers navigate the new landscape, the lessons of the past mix with insights for the future. This is not the end, but a new beginning, a call for informed decisions and a balanced approach to building lasting value. Stay informed and prepared. Subscribe for the latest insights on California's evolving housing market. Want more videos like this? Watch the next one here. And don't forget to subscribe for weekly uploads.